Folks, I believe this is the most important AI stock in America right now. Not the most hyped, not the most popular on Reddit, the most important. And right now there is a war going on between two of the most famous investors in the world about whether this company is worth buying or selling. On one side you have the man who predicted the 2008 housing crash, the investor immortalized in The Big Short. He has placed nearly $1 billion in bets against this company. He wrote a 10,000-word manifesto calling it a fraud of the modern era, and he is predicting a 60% crash in the stock price. On the other side you have the CEO of this company, who went on national television and called his own results, quote, indisputably the best results I am aware of in tech in the last decade. Revenue grew 70% in a single year. Earnings beat expectations. $7.18 billion in revenue, guided for 2026. 61% growth projected. $11.2 billion in contracted backlog. 41% operating margin. $3.9 billion in cash. And the CEO confirmed on CNBC just this week that his company's technology is giving the West a critical edge in active military operations in the Middle East right now. So who is right? The Big Short investor betting 60% downside, or the CEO sitting on the best financial results in the history of his company, with his technology deployed in the most important military operation of the year? That is what we are going to figure out today, and I will tell you exactly which side of this argument I am on at the end. Stay until the end, because the number I am going to reveal at minute 6 is the single most important piece of evidence in this entire debate. Now I am going to present my case, and then I want you to go do your own due diligence and be your own judge. Make sure you subscribe right now and hit that bell icon. Every single day I bring you the freshest stock analysis here on Stock Alerts Daily. Do not miss a single one. Now let me start with the bear case, because I think you need to understand exactly what the most famous short seller in the world is saying before I tell you why I disagree. The man who predicted the 2008 crash has gone all in against this company. $912 million in put options. A 10,000-word written analysis calling the company a fraud of the modern era. A technical chart analysis predicting a 60% crash to between $50 and $60 per share. Here is his argument in plain English. First, the company traded unprofitable for most of its existence, and only recently turned profitable. He argues this profitability is not as real as it looks. Second, in 9 of the last 12 quarters, accounts receivable grew faster than actual revenue. He argues this suggests the company is booking sales before it has actually collected the money. He calls this nefarious accounting. Third, the CEO spent $17 million on private jets last year. That is 123% more than the prior year, and dramatically more than what peer technology executives spend. He argues this shows a culture of excess and misaligned incentives. Fourth, the valuation is almost 200 times earnings. He argues no company is worth 200 times earnings, not even the best technology company in history. Now here is the bull case, and this is where it gets interesting, because the CEO of this company called the short seller BAT something crazy on television, and then his company reported the best quarter in its history. This company builds decision intelligence software. Their platforms take the most complex, chaotic data sets in the world and turn them into actionable decisions for humans making consequential choices. Battlefield commanders, intelligence analysts, hospital systems, energy companies. 3 core platforms. Platform 1 is government intelligence, deployed by the US intelligence community and Department of Defense for over 2 decades. 20 years of proven deployment in the most classified environments on Earth. This is not a trial. This is infrastructure. Platform 2 is enterprise operating system, deployed at hundreds of the world's largest companies in financial services, healthcare, energy, and manufacturing, already generating over $2 billion in annual revenue and growing at over 100%. Platform 3 is their AI platform, the newest and fastest growing product, letting enterprises deploy AI agents directly on their own proprietary data in secure environments. This is the product driving commercial revenue to double in 2026. Now the profit picture. Q4 2025 revenue $1.41 billion, beat analyst expectations by 6.8%, 70% growth year over year. Earnings per share 25 cents, beat expectations. Net income $608 million, full year revenue $4.48 billion. US commercial revenue more than doubled. Remaining deal value in US commercial contracts up 145% to $4.38 billion. Operating margin 41%. These are not the numbers of a fraud. These are the numbers of one of the fastest growing enterprise software companies in American history. Now the news that changes everything. And here is the part I have been building toward. The CEO of this company went on CNBC this week. He was asked directly about the Iran conflict and active US military operations. And he said this company's technology gives the West a critical edge in the Middle East. Present tense, right now, as the most complex multi-domain military operation since the Gulf War unfolds. His AI is inside that operation. The Pentagon just designated his company's Maven Smart System AI as a formal military program of record, not a pilot, not a test, a permanent part of how the US military operates with guaranteed multi-year funding. The US Army signed a contract worth up to $10 billion. The US Navy signed a $448 million deal. And here is the number that I promised you at minute 6. Norway's Sovereign Wealth Fund, the largest sovereign wealth fund on Earth, $5.1 billion in new stake in this company, disclosed last week. $5.1 billion from the most disciplined institutional investor in the world. The same week, the Big Short investor was predicting a 60% crash. The Norwegians looked at the exact same company and bet $5.1 billion in the other direction. That is the entire debate in one fact. Michael Burry, 900 million in puts, predicting 60% downside. Norges Bank Investment Management, 5.1 billion new stake, betting on the long term. Now my view, here is where I land on this. The valuation concern is real. 200 times earnings is expensive. That is not debatable. If revenue growth slows, the multiple compression alone could hurt the stock. The CEO jet spending is a legitimate governance concern. $17 million on a private jet when you are asking investors to trust you with their capital is a bad look regardless of the revenue numbers. And the accounts receivable growth is something every investor in this stock should understand before making a decision. But a company whose AI is deployed in active US military operations in Iran right now, whose technology the Pentagon just designated as a permanent military program of record, that is generating 70% revenue growth. That just attracted a $5.1 billion stake from the world's largest sovereign wealth fund, and that is guiding to 61% growth in 2026, is not a company that is worth zero. The bull versus bear argument on this stock is one of the most interesting debates in the market right now, and both sides have legitimate points. But the one thing both sides agree on is that this company is at the absolute center of the AI and defense story of our generation. The company is Palantir Technologies Incorporated, ticker symbol PLTR. Check nasdaq.com for the current price before making any decisions. That is your complete Palantir analysis. If this video gave you value today, hit that thumbs up right now, subscribe and hit the bell so you never miss our daily stock alerts here on Stock Alerts Daily. Drop a comment below. Are you on Team Burry or Team Karp? I want to know. I read every single comment. See you tomorrow with another fresh analysis. Do not miss it. And as always, nothing in this video is financial advice. This stock is shared for informational and educational purposes only. Always do your own research. Always check nasdaq.com for the current price before making any decisions. Investing involves risk, including possible loss of principal.